Hi friends, let's take a look at Ethereum. Ethereum? What? Let's take a look at Tezos versus Bitcoin, the US dollar coin, and the Ethereum Bob as well in this episode. Thank you so much for tuning in. Really do appreciate it. This is our descending wedge that we've been looking at here. Obviously, this is drawn in a little bit kind of, it's not that great, but it's drawn in there. And that's kind of off the back of, bullish divergence here on the MACD. As you can see a bit more clearly now, I'm on the 24-hour time frame. It was there on the 4-hour time frame as well. And what we're looking to is whether or not we kind of move towards the top side. Now, this upper line of this thing is kind of more or less redundant for us. We've really got a couple of key lines to look to here. For instance, the 20K area, very much important. And the next area, 24K. And the next area, 25,500. Now, what's important here at our feet is, and it has been for the last 4 days, all this week actually, Monday, Tuesday, Wednesday, Thursday, is this lower red line here, and we're finding support here at it. Is this going to turn around? Is this going to be the point for us? Is this the good stuff? Is it, or is it? Isn't it? Let's find out in the next few days. But right now, things are kind of lined up for us to be able to make assessments off the back of all of this quite neatly. I've just adjusted that 236 to show us where this key area is. And of course, this orange line towards the top line, this, the amber zone in the middle here, just get out the wee drawing tool, This amber zone in the middle here is going to be really important for us. It's going to be important for us, and the 236 there kind of underpinning that for us as well in terms of its importance. Now as well, we're going to have to look towards the 21 exponential moving average. If these things do start to get going towards the top side, it would be easy to get excited and want to hold on to all your positions. Of course it would be, but if you're trading this is a channel for traders, of course. Just bear in mind that between this red line and orange line, it's 10% movement towards the top side. 10% is enough to make people be able to just kind of stop working for the rest of the year if they're an asset manager. Here, a 15% move towards the top side there afterwards. That means that you go to being the most famous asset manager in the world. And at this point here, you go up towards 590. Everyone withdraws their money from your account because despite the fact that you had this huge rise up, the fact that you didn't take profit until such times as you'd gone a full 35% up in terms of profit means that people think that actually, you've got your risk management isn't really working for you despite the good gains. Okay, so look out for that. Remember that yourself. That's the way the world works in terms of the professional world. But of course, we could be going up towards that area, and that is of course the goal. Looking here at the USD pricing, of course, the same chat with this wedge, and of course we have an inside pitchfork. Now, what remains the case is that we could do all of that like we just talked about in Bitcoin, all the way up to all these areas. In fact, going all the way up to highs 30,000, and that would be the target. And of course, in terms of trading, you're more than welcome to go ahead. I'm not a financial advisor, none of this financial advice, but you're more than welcome to go ahead and look for a 66% movement towards the top side. If you're trading this on sort of 10x margin, for instance, on Binance or something like that, then you're looking at sort of like 666% return on investment there. That would be nuts. So anyway, making 6 times your money. So, there's plenty of opportunity there. But if we break down below this area, then it's reasonable enough to look down towards this 1830 area, and 1530 is the 2 next targets towards the downside. Okay, the 2 next targets lining up here. If we just had horizontals on them instead, you'd be looking at this area and this area as your next 2 towards the downside. Okay, so look out for that, right? And that's the reality. That remains the case. Here we've got this inside pitchfork, of course, finding support down here at the very bottom of it, as we did over here as well. Putting in a low. Now this is in terms of the counter trend indicator here with the RSI looking for divergence, it doesn't look bullishly divergent just there. In terms of the stochastics, well, there's class B bullish divergence. It's kind of debatable in a sense, but it's there, and it's not very great. In terms of the DMI, is there that divergence as well? And looking between this, you can see that there isn't. The way that this works, of course, being that you've got a higher high over here than the previous high, showing the increased strength of trend, and because of the way that this thing is calculated, you don't look for lows and lows, you look for highs corresponding. So yes, but we do have that bullish divergence over here prematurely on the MACD, giving us this sort of wedge stripe structure, and wedges can become channels, which is the sort of failure of the divergence. And if we do want to see upside targets, then of course we just have to look towards the prices moving above $2.13, of course, where we've been to over the last couple of days in terms of our highs, and then moving on up the way again thereafter. Looking at this, by the way, in terms of trading this thing, if you are trading it, which I think you probably should be, but then again, I'm not a financial advisor, none of this financial advice. If you're taking profit in any of those areas, let's just say you did it at the 236 and then it went back down again, you're looking at having made 10% movement towards the downside, at which point then, if you had been trading this, now I'm not saying you need to trade it like this, I haven't been trading it like this exactly myself either over the last wee while. I've been more relaxed about it really myself, but I have been telling people all of this, and I could have been doing it, and had I wanted to, this is what I would have done, and yada yada. Now you're looking at another 10% movement towards the top side. Of course, movements up the way require less in terms of real dollar value, in terms of to be able to make the same percentage moves. So, nice movement up the way there. And that's what we've got, 10%, 10%, 10% all the way along here. And I've been saying this 10%, 10%, 10% thing for the longest time now. Anyway, if we go an additional 10% thereafter from where we are now, we're looking up towards the top end of that wedge, which could see targets coming up as far as, for instance, if we just use this measuring stick over here, how's that looking in terms of its girth? Just make it a bit bigger. Then when you how many times has your girlfriend thought that, hey? Lols. Looking here at 290 would be your full sort of move off the back of it. If you go 60% and you think about this fact that there's got the 236 the feckin' excuse my language, 200 simple moving average in here, just above the 236 Fibonacci retracement point. You've got the 21 EMA, the 55, that's up above us, but you've got the 233. You've got various confluence in here as well, no less as the sort of the lower line here on the way, just as initiating it up towards the median line of the pitchfork. You've got enough on your plate there to be getting on with, and of course you can trade it however way you like. I'm not a financial advisor, I'm not your mama, I'm not your papa. I'm just here as your spirit guide, telling you, oh my god, the best value technical analysis that you could possibly hope to have. Look at that. They're respecting the sort of the idea of this being a head and shoulders style movement, obviously very, very sloppy and over to the side, but this it doesn't function perfectly with certain things about it. But in terms of the psychology of this is what we're looking at right now, with this being a head shoulder. In fact, I'll just use the stupid head and shoulders tool. Now what I want to see happen is for this to fail, okay? Just to be very clear on this point here, let's draw it in like this. What I want to see happen is for this to fail, right? This will do, even though it's not accurate. Put this up a bit. Right, okay, so I want to see is this fail. I've said that 10 times now. But that's what we're looking at in terms of, I hate that tool, I'm getting rid of it. But that's what I was talking about. And we've seen this being respected perfectly over here on this particular dollar chart there, with its lows at the just sub $2 area, and coming up then and giving us another decent move up the way in order to be able to take profit on all of this. It's just treating you so well as a trader. I hope you like it. We kind of followed the path of that tick line there. I'll remove it. Need to readjust this here. This, of course, is just the same as what we've seen before, 250 being your key area for the 236 in terms of our highs to most recent of lows. Our most recent big time high at 453 down to there. That's where we've come from. That's where we're going to so far. But if we do go on down the way, then of course the two targets towards the downside, of course, exist here with these two areas, 159, 130, let's say. But now let's go on to the Ethereum. In fact, here's HitBTC. If charting anywhere was ever easy, then HitBTC with Tezos is the daddy for that, perhaps. As you can see, clearly still respecting our parallel channel that we've had on the charts now for well over a month. And this, it doesn't need any explanation, does it? It doesn't need any explanation. It doesn't need any explanation, mate. It doesn't. Picture says 1,000 words. Let's just do it. Let's do a body-to-body one in terms of putting in the context here for people. Body to body. Coming in here at 250. Let's go wick to wick. and coming in at 250 still. So this is what we're looking at, the 200 simple, right, and our serrated line before we can really get positive on this thing, because there is a move outside of this, but it could be fake out. But then if we do go on past it, very, very good. If we don't, we could be coming back down to those areas. Movements down past that do come in then with our targets 165, 130, 150, 160, 130 are our two targets. The Ethereum pairing, same chat scenario over here, but what we see actually is potential for Class B divergence. Well, we didn't actually have that on the RSI over here versus the dollar, or indeed versus the Bitcoin. Is that right? Yeah, that's right. But we have it kind of here, Class B style on the Ethereum pairing, and you can see that exists on the MACD as well, and the Stochastics. Let's bring up this full screen to see, well, we've got this increase in strength of trend, so there's not divergence here, but what we do actually have is this coming up close to this 40 area. You can see that's blue here. It's blue for a reason. And then we've come back down past the ADX here. We could see this kind of go. Now, what I want to see happen in terms of the positive trend is for this first off to come below 30 in terms of the negative DI. And what we see here is that the positive DI has come down to what we could consider, which although it's not from a textbook, there isn't a textbook that says that this is, although there could be one, but it'd be wrong, but where you got oversold territory on this one necessarily is not really exactly right to be saying that it's here, but I'm going to say that it's here anyway, because use this thing enough to be able to say what I want about it. And here we are, and we've kind of come from that territory up the way. I want to see us live above this red line here, and that's red for a reason, okay? Just so we come close enough to our two areas in terms of thinking about that, and we could see a turnaround from these points, and it could be a good one that has the degree of momentum to go alongside of it. And I want to see this moving out past the fake out zone of the 21 EMA in there at 66, so 10% move towards the top side. Gotta watch out, plenty of profit to be had there, simply just taking profit at where the fake out could potentially go to. But the full measured move of this thing could have two targets, 70 and then up as high as 75. Massive gains for us really overall in terms of percentages. You don't really need me to measure it out, but you've got your 10% there, you've got your 16%, and then 25%. So very, very good if that were to be the case. And then from there you'd be taking the 236 out. Now take that 236, things could get very, 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 very good against Ethereum, and that would be very, 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 very good. Movements down past towards the lower side currently have to be reminded that as well, that you have easily 10% in terms of down below us to stay within this wedge, and then movements down past that zone could be looking down towards our next area. I'll just stick a quick horizontal in here and say, you could then easily be looking down as far as that, which is of course another huge chunk of the prices from where they are right now. You'd be talking about a 30% decrease in price. So you don't want to see that happening, but there both sides of the story. And I'm going to tune out and I'm going to say to everybody, thank you so much for watching this episode, and hit that subscribe button. See if you hit that subscribe button, you'll be doing not only myself and the channel a great favor, but everybody who hasn't found the channel yet, because you can see the value here. It's incredible. There's incredible value for people who are trading this thing. I can't put it into words. I can't really put it into words just how fantastic this has been. This is basically epitomizes all of your dreams and hopes and dreams as being a trader right here on the channel. Seriously, it does. That's everything we've been looking at for the last 6 months or so. So if you can then, so a lot of people would benefit from that in the world. Maybe you'd help them out by hitting that subscribe button too. If you're not doing it for me, you're doing it for them as well. Remember as well, a friend of yours is a friend of mine, so introduce me to your friends. I'd love to meet them. And thank you so much for tuning in. And if you want to take part in the Bitcoin giveaway, remember, write Rocky You Rock under this and the other episodes today as well on the channel for all those entries into the competition. There'll be a giveaway done on the last day of September. What song is that? It's a nursery rhyme song, that one. And the last I saw three ships go sailing by, sailing by, sailing by. Saw three ships go sailing by. And the last day of September. Is that what that is? I don't know. Anyway, I'll catch you later. Thanks so much for tuning in. I've been Rocky Outcrop, and I'll see you next time.